Welcome to Trading Lounge and the Bitcoin report for the 19th of the 12th. So that's Sydney time, Australia time in the morning at 8 a.m. And let's have a look at our wave count. So we're pretty much on track here. So looking at this as wave 1 and 2 here, and wave 1 and 2 here for this, and then moving up here for wave 3 here. And yeah, let's go in and have a closer look at this. So from wave 2 to wave 3 here, we're looking for 5 waves within this particular structure. So let's go in and have a look at this. So I'll need to adjust things here a little bit, as you can see. So from blue wave 2 here to blue wave 3 here, I'll need to lift that up a bit because wave 3 pushed up quite high here. So that's okay. Just I want you to see my errors as well as good things, bad, or the good, bad, and the ugly. It's good to know all of it. So we can move this wave 4 up here. We'll just clean this up here. Just bear with me while I do a bit of housework. If I have to work, well then you can watch. So it's going quite nicely. So we're going to see a move go up to what I call the medium level, which is the 25,000 area through here. And we're looking for 5 waves between wave 2 and wave 3 here. So we're looking at wave 1 and 2. We're going to break all this down today. Wave 3, wave 4, and wave 5 here. And then we'll see wave 4 and wave 5 moving up into that space there. So it's all pretty straightforward, really. And wave 5 up here. Because the extension's in wave 3 here, by the by, that means that wave 1 here and wave 5 will be roughly the same length, okay? Just as a rule of thumb, so you don't have to pin that down too much. And then I'm just going to copy this 20,000 and take that up to 30,000, and that can move up there higher. And we'll probably see this pull back to the wave 4 of this degree rather than this degree of structure, or the 38.2%. So we can just take this from down here and take that up to wherever that is here, and we can look at that 38.2%. So I'll just take that up to 2650. I wanted to get another 10 points lower, 10 points higher, 10 points lower. It doesn't matter, I'll get it there anyway. Anyway, that's the 38.2% here, but we'll be able to work that out anyway. So I'll just drop that a tad lower there, but it'll be something like this here. So we'll look for a classic trading levels pattern across the 25,000, which is the medium level. Medium level's always halfway between 2 major levels, and the major levels are just the Fibonacci numbers. In a nutshell, 1, 2, 3, 5, 8, and then we go to the power of 10 again. So between 30,000 and 50,000, which will be the next level, we put in the medium level at 40 here. So the medium levels just carry less weight, that's all, than the major levels. So with that in mind, our job today is really looking a closer look at wave 4 to wave 5 here, and then also mainly looking at wave 2 to wave 3 here for this. So I'm just moving to the 4-hour chart here, and I haven't put any money in as such, and I've just got my 71,000 in there, which is Australian dollars. So a lot of my buying was done pretty much down, all just building in through down here. As I got more confidence in it, and my partner agreed to do it more, then I started to put in some more capital here. So our $70,000 is probably around $20,000 up at this particular stage. But I wanted to get some wanted to move into Ripple right on the low there, because I understood the pattern, but I didn't get a chance to do that either. So but I'm going to start putting money into Ripple during all of this as well. So anyway, last time we spoke, we were looking at wave 1 moving up here, so we can take a closer look at that as well today, and looking for wave 2 to go back, so that can sit on top there like that. And then we need to look at the 5 waves within this structure, and wave 4 is finishing here. So also too, I need to point out with the trading levels, we've got major level here, then we've got minor levels. So minor levels 1, 2, and 3 here, just the Fibonacci numbers repeating, and then we'll go up to, just nail that down to the right price there a bit better. So yeah, 1, 2, 3, and then we end up with 5 here, which is a medium level, and then from there we would also look, while we're here, we'll just go to 8. So it's just the Fibonacci numbers as a price ratio, so 1, 2, 3, 5, and 8, and we'll see those play out, and that helps with the geometry of it, and also it also helps with the psychology, and the psychology to me is obviously just volume, and when you talk about volume you start to look at the price and how people think about price, and some numbers are stronger than other numbers. So 1 is the strongest number, then 5 is the second strongest number, and so on. So anyway, blah blah blah. So 1, 2, 3, 4, and 5. So we'll be moving up here now. We'll be taking a look at that. So we'll be reaching 25,000 in a very short while, and then we're going to get a correction there. You're going to see some profit taking, so that's going to bring us back to the wave 4 of 1 lesser degree, or another way to look at that is the 38.2% retracement level from this low to wherever that high is. Okay, so in this case it comes back to the 38 point, and it may not pull all that way back as well. We'll take that on board, but that's what we're looking for here, and then we're looking for from here we'll be looking for an A wave, a B wave, and a C wave moving back. It can come back to the wave 4 of 1 lesser degree, and then if we look at wave 1 over here and take that there and move that over there, that will take us to wave 5 over here, roughly speaking. There's other ways to do that as well, and then that will be wave 3 there. So then we'll see a larger correction at that point across this level, and A, B, C across here. That will also pull back. Well, it can pull back even lower. It can pull back from this wave to here, so we can probably be better on the bigger picture, but just from this low here, we take that up to wherever that's going to go here, and that can bring us all the way back down to 21. Now, it probably won't do that, but we'll certainly see a correction, and we'll need to track that. So that can bring us back down into this level here. The main takeaway here is that the main takeaway here is this price here, we're likely to see that in this waveform, we're likely to see it in this waveform. So just control your FOMO in amongst all of this. Obviously you can work the trades if you're trading, and if you're trading long here or here, then getting out at the 25,000, that's the target. So I better put that in there, take profit there. That's if you're trading. I mean, I'm not trading, as you know, I'm just stacking. So that's the target there for traders anyway. Right, I'll just remove that because it's just a bit. It can sit about there. That should not be breached at that point. Okay, so that's kind of the bigger picture in a way. Probably see that something like that, but we can get into that. I mean, that will probably be bigger, but we just something we've got to work through. Wave 4s can get a bit complicated and ugly, especially if wave 3 has been powerful, which this wave 3 has. So what I want to do now is I want to break this down from wave 1 and 2 and 3 and 4 and 5 here. That's sort of where we are here at the moment. I'm not sure what I've done that on, but I'll just work through. Okay, so this is that's not helpful that much, but that helps us from this blue wave 2 here. This is just the 1 hour chart, and this is the wave 4 here, and that's the wave 3, wave 4 here. That can come over here, that can go over to there, that can go there, so on. That can go up there a bit higher. The levels up here would be quite interesting because we're coming into group 2. So as I mentioned, we've got the Fibonacci numbers run 1, 2, 3, 5, and 8. We'll have in here 720, and this because it's part of group 2, and in here will be 26. 26,500. So that's all of group 2 there. They just work together. I'll go into that later when we start looking at wave 5 here. So now we'll be looking at 1, 2, 3, 4, and 5 moving up here. And then we'll see an A and a B and a C probably bouncing off that because we've got nice demand here. And then 5 waves up into that structure there. I'll just go, I don't know what I've got on the 15-minute chart here. Just check. Okay, so just for the diehards, I've got wave 1 and 2 here, then 1 and 2 here, and then I've got 1 and 2 here, and then 1 and 2 and 3 and 4, and 1, 2, 3, 4, 5 for the third wave, fourth wave, fifth wave for the third wave, fourth wave, and the fifth wave. So even though that spiked higher, I'm still calling that the fifth wave here. Now, you know, and there's 5 waves within this structure now. That may be incorrect at that point, but I always work from the lowest point up, and I've seen this kind of thing happen before, so anyway, not a big deal in there. This is in 3 waves here, this correction here, so that's telling me whatever happens here, it's all corrective. That is a corrective pattern, so that's linked to this pattern, so all of that is corrective. So we can look at this as the A wave, the B wave, and the C wave to there. Just got to adjust this up, I haven't seen it, or we might even have to lift it higher. Yep, going to have to lift that over to here. And then we'll look at this as the 1 and the 2 here. 1, 2, 3, 4, 5 for the third wave, fourth wave extension in the fifth. So that's probably it done there. And now we're looking for this next move up here. So, in terms of long trades here, you can just go on when you in your own way, when you recognize that 20, I just get that right on the nose there, 2300, 23,000. I mean, it's crazy, isn't it? I mean, for one Bitcoin, 23,000 US dollars. I mean, gold's only 2,000 an ounce. I mean, it's incredible stuff, really. Okay, so looking at this little pattern off the low here and looking at the 23, which is the closest, largest number here, is that support yet? Because if it was going to fail, it would fail by having that number there as the resistance. So you just need to wait for it to have support. So support would normally be the arrival, the reaction here, the first high above the level, then some sort of little ABC pattern. And then you can just buy these highs here. That's set up, which is in turn, as you know, just clean this up here. So just clean that up. This is the most common pattern in the market at a level. So I might need just to squish that in a little bit more so you can see that. I'm just going to close that out again and bring it back up because I want to open some other ones. This is the most common pattern in the market when you've got a price point here, and that line is the price point, in this case 23,000. So the arrival, the reaction, the first high above the level, that reference point, that's what you need to wait for, because and the market will fall back. That becomes your entry point up there. Then the second high can become an entry point, but you can also refine it further. So this bigger pattern here that we're looking at here will be all tied up in a smaller version just in here. So you can redo that again and probably go long in here. Now you can go long in these parts down through here, but I'll leave that to you. It's just that it's higher risk, but it's higher reward. We know that the pattern is corrective anyway, so it's okay to buy on these lows here, because we know this pattern has already confirmed itself as being being corrective because of those first 5 waves to the downside. Now the second pattern here, the second most common pattern, is where it doesn't come back below the level here and doesn't check the demand here. And you always look over to the closest, largest price down here as well, because that's what you'll be working with. You've got to bring in the psychology of the pricing, which is the volume at the end of the day. So the variation on that pattern is this one here, where it doesn't come below the level, but you shouldn't get trapped by this, because we'd still be going long here and would still take the second entry here as well. And if you do make a mistake in here, just allow this to come down and do its thing here, because you wouldn't get out of this trade unless that level became the retested resistance. And in that case, you'd be looking at something like this here. So it'd need to retest it and fail that low and then move out at that point. Now the final pattern on the long side is the overshoot pattern, where it doesn't stop at the level here and just shoots straight up here and then has an ABC pattern here and then finds its way over here. But you still take that high, and that this high and that second high are the ones that are always still there, and they're your entry points, and you can refine it. Like you can refine it over here, you can buy back in over here as well. So you can build in. But in a nutshell, a trend has a beginning, a middle, and an end. So we know that, or you know now, that our next target area is the 25,000. Now that will be the medium level, so that can be like this. Now it could be that we have 1 and 2 here and 3 here and 4 here and then 5 here, have like this. We have something like this here, or we can just come to have 5 waves to this point here. But the point is that we know that we're going from wave 4 here to wave 5 over here, wherever it's going to be, and then we're going to go back over here, have a correction at this point. There will be profit taking there. There will be profit taking there. We see it because the wave 3 was a long trend, and wave 5 is going to be a shorter trend, and it'll also be on lower volume than the third wave as well. And because this is a shorter trend here, then that's telling you that, you know, it's not being driven as much. But what I'm trying to say here is that a trend, no matter what degree of structure, has a beginning, a middle, and an end. And really, when you're trading, you want to be building in the beginning of the trend. You don't want to be in the later part of the trend. So in building in this trend here, then you could look at 23,000, which is a minor level, and then start looking down here further. So the 100, the 200, and the 300, they're sub-levels. So that's 1, 2, and 3 again. Like we've got 1, 2, and 3 here in minor levels, we go down 1 degree, and they'll be in sub-levels. So 100, 200, and 300, as a trader, that's what you build in on. So you want to get 3 or 4 trade positions on that. And also too, when you get to 300 here, subgroup 300, and you get tested support on that, this time around you get tested support on that 300, that's telling you the market's leaving the 23,000 and it's going to be pushing up, and traders will be straight away looking at the 500 at that point. The 400 in this case won't give you much grief, but the 500 will. So the 500, you can see a dance across that, but it also gives you another opportunity to build in on top of that with a classic trading levels pattern again. Because this is really a classic trading levels pattern here as well. So we've got the arrival, the reaction here, the first high above the level, and then the ABC pattern, and that's why we would go long above that high, then that high, but we're dropping it down, we're working this one here. Now I'm talking to you about the sub-levels in here, 100, 200, and 300 to build in on, and the 500 to build on in, and then you'll catch that third wave here, and then you just sit there comfortably, and yeah, there will be a dance across the 400, but it won't be a biggie, but it gives you an opportunity to take profit and get back in again if you wanted to work the trade. So like I said, it doesn't matter what you do, as long as you know what you're doing. Alrighty, I'm going to leave it at that. Thanks for tuning in. Much appreciated. Cheers.